This episode of the Wheat's on Your Mind podcast was recorded on March 11th, 2026. Market situations have changed daily since the recording. The content provided is for informational purposes only. We hope you enjoy the episode.
Welcome to the Wheat's on Your Mind podcast. My name is Aaron Harries. Wheat's on Your Mind is brought to you by the Kansas Wheat Commission and Kansas Association of Wheat Growers. My guests on this episode are Mike O'Day and Josh Linville with StoneX. Mike O'Day is a risk management consultant with StoneX based in Kansas City, and Josh Linville is the vice president of fertilizer at StoneX. Thank you, gentlemen, for joining me this morning. It's a timely day to talk with you about grain markets and fertilizer markets as we are recording this. The Iran conflict is into week number 2, and it's good having two experts on at this point in time. It feels like a historic time with markets acting kind of anxious and farmers very concerned. So, Mike, we'll start with you. Wheat markets kind of had a reversal leading into the Iran situation. So give us your thoughts on the wheat price movements before we talk to Josh about fertilizer.
It was pretty interesting. We've got the volatility in the market coming from the crude market, but the wheat market was rallying before all this started, and it was mainly on fund short covering. And there's some decent seasonals in February into March that do see that. We started this just short covering back in Paris, actually, kind of in December, January, and this kind of all flowed back into the U.S. markets. We'd seen these funds really get out of their shorts, but they were still a little short as this whole crude thing started to blow up, literally, and that pushed the markets higher. So if you looked at the commitment of traders report from last week, we had the funds long KC to maybe a little long Chicago, and then Matif wheat in Paris they were about to get even to. Now the thing is, everything's bearish fundamentally. So this was strictly a money move, a money flow move. I was actually looking at some crude oil wheat correlation charts. I normally don't like to look at those too much, but actually if you look at those correlation charts, wheat's actually got a better correlation than soybean oil or corn. So we're just going to continue to be at the mercy of what the crude market does. I think this is a good opportunity to sell. Now the question is, where do you sell? We ran July wheat up to 650 in KC, above 6 in Chicago. And Minneapolis, the September got close to, 690. So I still think it's a selling opportunity, but, we're not even in the seasonals. And that's the thing that bothers me the most, both for wheat, corn, and beans. We get into that mid-April into May, June time frame. That's when you typically put your highs in. So until we get this crude thing squared away, we're still going to have to deal with weather, supply and demand. Josh can talk about fertilizer. Fuel costs are going up. Probably one of the most things I was most friendly about the market, I was looking for a pretty significant decline in spring wheat plantings because of, just more corn going into North Dakota and some of the northern states. Now with the fertilizer and fuel, I'm wondering how much we're going to see switch. Plus, if we continue to run these futures up, whether it's corn, wheat, or beans, do people kind of change what they're doing also? That's kind of my short little take here.
Yeah, that's a great point. So, Josh, let's turn to you. I mean, it's pretty significant, the Strait of Hormuz, if it's closed to fertilizer traffic, or is it? What are you hearing?
Yeah, it's everything you see. It sounds like a couple oil ships tried to make their way through last night. Those have been struck. You're starting to see some videos, starting to see pictures of those boats on fire. So, unfortunately, for the most part, the strait's still closed. And something we had been talking about quite a bit last couple years, actually, is we've got a map that shows the Middle East and North Africa. And the thing we've always talked about, and something Mike created, 1 out of every 2 tons of your global urea that gets exported comes out of that little part of the map. 1/3 of all the global urea flows through the Strait of Hormuz. And it's not just a nitrogen thing, right? We always talk about the Middle East, and we talk about nitrogen, we talk about oil and gas. There's a lot of phosphate that is produced and exported out of Saudi Arabia. And the global phosphate markets are controlled by 5 countries, right? 85-90% of your global production and exports of DAP, MAP come from China, Russia, Morocco, Saudi Arabia, and the U.S. Well, right now, China's not exporting. They're normally the biggest. Saudi Arabia is caught behind the strait, and our own production rates are near historic lows. So we're talking 3 of the top 5 have got major issues today. And as to be expected, prices have been jumping up significantly. I think since the first half of December, the urea prices are up nearly 80%. And when you look at the corn price, maybe up a quarter.
Yeah. We know already the volatility now, and add on top of that, aren't we entering the largest import period for fertilizer for U.S. this time of the year?
We are. April is the single biggest arrival month for imports. And I say arrival because it's important to show the difference between a shipping date and an arrival date. Half of our imports come from the Middle East. And if three of us came together, we said, listen, we want a vessel of urea today. They've got it at the port. We've got an open vessel. The strait is open. 48 hours to load the boat. It gets on the water. It's still going to be 30 days before it arrives here. So we're talking about it doesn't arrive here until best case scenario, middle of April. And that's why this is so important. We are missing out literally on the most important import part of the year with the loss of what we have today.
You mentioned China. They were already restricting their supply, I think, and then add into that the Russian-Ukraine conflict. How is that already affecting the marketplace?
Strangely enough, it's actually been a boost for the Russian exports of urea. The reason being, when that war began, when Russia invaded Ukraine, Canada, Australia, and large parts of Europe cut off trade with Russia. They said, no more, we're done. Well, that started to cut out Russia's export facility or their destination for UAN. It's a very small market, the UAN market is. So they lost those, and what they did is they started to take some of that UAN production, they turned it back over to urea. So before the start of the invasion, they were exporting about 7 million ton of urea. We think 2025, when we get that data, we think it's going to be somewhere in that 9 to 10 million ton range. So it's been a boost. The unfortunate part of it is happened right before the Russian invasion. It's Europe. Europe was always relying on cheap Russian gas. They got in that tip before the invasion, and they shut down the Nord Stream pipeline, and then somebody blew it up. They made sure those tons cannot go through there. The units cannot go through there. European production fell from 100% down to about 70-75%. That removed about 3.5 million tons of urea production.
Wow.
And it made 3.5 million tons of extra demand in the world that's kind of quote unquote unnatural today.
Yeah. I did an interview a few weeks ago with the head of the Fertilizer Institute and learned a lot about how just global the fertilizer industry is and how it's used as a political bludgeon a lot of the times. Wasn't aware of that.
Yeah. China's done a very great job with that, right? They came out this year and said, we're not going to export until August. That's your biggest phosphate exporter. That is your third biggest urea exporter. And the government said, we're going to keep our people happy. End of the day, communist government, their biggest danger is not an outside country. It's an uprising by their own people.
Yeah.
Well, about 25% of the Chinese population is attached to ag today. Stop exports. You maintain solid supplies at home, and you keep prices lower than the rest of the world. It's a win-win.
Mike, so we get focused on this fertilizer thing, and we know a little bit about the U.S. wheat crop prospects, but the impact of the nitrogen market prices and availability, how do you think that could globally impact the 26, 27 wheat production and trade on a worldwide basis?
Actually, we were talking about that yesterday after the WASDE report. WASDE came in about as we expected, but you think about global wheat production, I would think the U.S. farmer can handle this a little bit better than the offshore guy just because distribution channels, the ability to get stuff, it's going to cost more. But can we see just a global decline in yields just off fertilizer use for the year? Just take a bushel or two off the yields we've seen the last couple of years because we're in an excess supply situation because of production, right? We have a demand problem. We don't have a supply problem, but we could shift that around a little bit. Yeah, we could see that. You think about top dressing on the winter wheat. Are we going to see that? Are guys going to pour the fertilizer to springs? The other thing you think about, does that become a quality issue? Mm-hmm. We know we need to pour on, or not pour on, but we need to add to the agronomy side to get these higher protein yields, whether it's springs or winters. Now, you've always got your weather issues there, but yeah, it could be a problem.
We're just getting into the top dressing season. That's a good point here and what you say correlating the nitrogen to protein. Have you heard any word on less fertilizer input from farmers out there?
Not yet, but I think we'll find out as people get into the field and we'll be able to tell pretty easy with what people are talking about. But that comes down to supply too. Are we going to run into these bottlenecks like we always do when it comes to getting the top dressing supplies too?
And that's something we're watching on the fertilizer side because the American farmer, it doesn't matter if you're corn, beans, wheat, it doesn't matter who you are. The finances have not been good at all this year. This fertilizer year, July 1 to June 30, So everybody seems like they've been a little bit more skittish, a little more delayed on their purchasing. And that's not just the farmer, that's the retailer, that's a distributor. But we've kept saying, listen, you can adopt a just-in-time demand model, but that does beget a just-in-time supply model, which is very expensive and riddled with problems. And I think that could be something that we've got to start talking about in a few weeks.
So, Josh, let's focus on North America here. Let's talk about, is there anything the U.S. can do trade-wise with Canada? I know it's a big phosphate market up there. And do you think this is any more of a wake-up call to increasing our domestic fertilizer production capacity?
I do. You have seen this administration talk about fertilizer more than any other administration combined that I can ever find. It's become a common talking point. You have got the major news outlets that are now talking about fertilizer markets and its importance to the world. So I think that's going to open some eyes. And it's something we've been a proponent for a while. The U.S. imports about 5 to 5.5 million tons of urea every year to meet the demand that we have. We don't have enough production. We share trade flows. In the East, we ship product north. In the West, they ship product south. But as a whole, we're still a net importer as a North American marketplace. And I don't see why we're doing that. We have got solid gas supplies. We've got cheap gas prices. We've got the demand here at home. And a lot of times I have people say, well, people are worried about the environment. They don't want the production. We've got some of the best environmental rules and regulations in the world. So we can produce it cleaner here. Just because it sits in Russia or some other place like that doesn't make it clean because you can't see it out your back window. So from a nitrogen standpoint, the simple answer is yes, I think it's opening a lot of eyes, and I hope that we will start to see some new facilities be built. Problem is, your first hurdle you got to come across is where do you come up with $3, $4, $5 billion to build that facility for a plant that won't produce the first ton for a couple years out. Phosphate, unfortunately, it's not as simple. You've got to have phosphate rock. You've got to have access to it. And that's the problem we continue to see down in Florida is they continue to run out of room that they can mine, and the quality of the rock they have access to continues to decline. And until somebody can go out and find a brand new phosphate rock reserve somewhere in the U.S. or in Canada, which hasn't been found yet, there's not a whole lot we can do. Our point of view has been keep looking for it here and hope that you stumble upon something. But to make sure you got access to something, go and look and invest in places like Saudi Arabia, Morocco, Egypt. Norway found a massive phosphate rock reserve there that they want to develop. Go and say, can we help you invest in this and help build this and share our expertise, and in return get a guaranteed long-term offtake supply with that. It's not as good as having production here, but if you can't do that, that's the next best step. And potash, we're fine. That's the one thing we've actually seen a lot of the government step in and put money into it and things like that. It's the one we don't need help with. It's well priced. It's well supplied. We have Canada to our north. They're the biggest player in the world.
How quickly can the market correct, and maybe not correct is the correct term, if this war ends pretty rapidly and shipping resumes to quote-unquote normal, what kind of reaction would you see? Let's start with the grain market and or fertilizer market. Mike?
Oh, I think you can see this thing correct pretty quick. I mean, I've been doing this for 40 years, and I've been through 4 or 5 wars, and you always get these big spikes up and the market corrects. So I think it's pretty, just go look at the inverse in the crude market today. Market's pricing in fear and greed right now. And as the fear and greed comes out of the market, things will return to norm. But like I said, it's going to take just getting things moving again. And the problem with our little world is when things stop, it's really hard to get things going back again. So you're looking at 30, 60, 90-day time lags to get things squared away. So, but like I said, I think these rallies are pretty good pricing opportunities for the producer. I don't know where prices are going. I'm not even going to profess to know that. That's why people just need to be pretty proactive with their marketing plans and know what they want to be doing.
What does it indicate to you that, I think you mentioned the other day that the funds are net long in the wheat market for the first time in a long time? What does that mean for the long term?
I think there's a viewpoint out there that hard assets are underpriced, whether it's gold, silver, a hard commodity. I do think there's also more of an inflation story out there that specific type traders are looking at. The hedge fund crowd's looking at, prices moving higher, whether it's food, fuel, or the softs. So there's money flowing into these markets. And I think what you'll see is they'll stay fairly aggressive until we get into the second half of the year when we get the northern hemisphere wheat harvest completed, and we'll see what the supply side looks at. Because if we're going to lose a wheat crop, we lose it in May, June, right?
Yeah.
Whether it's in the U.S., Russia, or the EU. So there's a lot of questions here still to keep some volatility in this market in the front end. And then we'll see where we're at in the back end of the thing.
Josh, do you see anything in the near term that's going to soften the nitrogen market? Any factors that could happen? Any other major world events?
Well, we've talked a lot about what happens if overnight, let's just say we wake up tomorrow and the Strait is reopened, it's vessel traffic, there's no more attacks, everybody can go through without a second thought in their mind. Well, it's going to take a while to A, get all those vessels moving, B, to get the manufacturing plants back online and producing tons again, and then C, you think about how long it takes to load a vessel. I mean, right? It's not a 2-hour situation, it's a multi-day situation. So it's going to take a long time to get those vessels loaded and back out to sea and get those normal channels going again. But I do think if we wake up tomorrow, like to that news, you will see a sell-off. There's a lot of tired longs in the fertilizer market. They've been making a lot of money, and they're very skittish. They don't want to give it up. They know there's more upside if this thing continues, but they also know this thing will dip pretty quickly. So if tomorrow that the war is done, I do think you see a sharp step lower, but then the realization that we have created a longer-lasting supply problem to the world starts to take over again. You start to ramp that thing back up. And unfortunately, from a U.S. perspective, we have substantially raised the price floor for this spring because, again, we've lost half of the most important window that we have, which is April. And we were already kind of delayed on our buying patterns, and now we're just trying to play catch up even more. So even if you see something like a NOLA, New Orleans, Louisiana market fall, your price very well could go higher. And that's just a simple basis widening out even further as everybody comes to the trough to feed at the same time.
That's locked in, Mike. I mean, the shift on corn acres, do you expect one?
Yeah, it's going to be, actually, I think that's why we're going to keep a bid under the corn market now. So, we watch those weak corn spreads quite a bit. But now if we're talking 93 million acres of corn, and you're looking at trend yield, all of a sudden these balance sheets start to get a little tighter in corn. So I think that's going to keep a bid under the market going into the spring planting time as we fight for acres. I don't want to get into the RFS of the Z45 stuff, but we've got a lot more clarity in those policies now. So there's a whole lot of people I know that are really still bullish bean oil. And, bean oil drives crush margins. So the crush margins remain good. Beans are running up. Where do you take no beans? What value buys acres? And then also we start talking about specialty crops, especially up north. We're going to see a lot more canola go in. Peas, pulses, lentils are going to continue to buy acres. And the job of the market's not to trade what we know. We trade what we don't know, and that's going to be that whole seasonal time frame. We like to get stuff done.
Well, as we wrap up here, all this market uncertainty and volatility, tell us about the role that StoneX plays in working with your customers and your farmers to kind of help them out.
We just work with risk management, helping people just manage risk. Whether it's a commercial grain elevator, commercial flour miller, baker. We do work with producers quite a bit on several different pieces of the company.
Yeah, we always liken the fertilizer market to where it is today to where the grain markets were back in the 60s and 70s, right? It's still a very flat price risk marketplace. So we're trying to kind of teach the market, here's how you use these fertilizer futures to hedge your bets, how to get out ahead of where the manufacturers are willing to give you the price for. But really it comes down to its information. Fertilizer markets are not something that's always been readily available. Very hard to find information. I think to a certain extent that is by design. Growing up on a farm, Northwest Missouri, Dad said the biggest cost per acre is fertilizer. I don't know a thing about it. So we try to get a lot of information out there. A more well-educated marketplace is more able to stay ahead of these moves. I know, like we put out our farmer newsletter once a month, and the thing we talked about last week, you see the Strait shut down, you see an attack, get ahead of this thing. And that's the important thing, is being able to know, okay, if something happens in the Middle East, here's what it means for me. If something happens in Russia, here's what it means for me. It's education, to Mike's point, trying to get out there and don't look so much at just the flat price of the grain, just the flat price of fertilizers. Look at that combination, trying to find the value in between it.
Thanks for sharing your expertise. Glad you're out there looking out for everything. I know you're not going to have many dull moments here in the near future. So stay on top of it. Appreciate you joining us on the podcast today.
Thanks for having us on.
Absolutely.
Thanks to Mike O'Day and Josh Linville with StoneX for being my guest on this episode of the podcast. If you have any follow-up questions, please email us at kswheat@kswheat.com. You can find all previous episodes of the podcast at wheatsonyourmind.com. Thanks for listening.